Hello friends, welcome to my channel and thanks for watching this video. So after a very long time we have two consecutive sessions of green. Wall Street has actually moved and moved quite a lot, and it has spread across indices. So this is, I would say, a good close. I'm not saying a very good or an excellent close, but rather it's a good close because last Thursday and last Friday was indeed a green session where 600 700 points of an upside, and a base formation or a range formation in some cases are very clear. So we will discuss each and everything, and we will see what has happened in the last 1 week and what will probably happen in the next 1 week. So I'll welcome you all to another session of US weekly market report series. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. So let us start with the important headlines. These are all related to stock and how the stock market has moved. The headline is 10-year treasury yield retreats. Whether this is important or not, that is something which we need to understand, because it all depends upon, one day Fed is saying something else, another day some other member from FOMC of Fed is saying something else. So this is completely makes the market volatile in short term, and you can see moves on both the sides, and there are very sharp moves that has happened. Apart from that, Meta announces big price cuts for its VR headsets. Now, you can, this is very important. Those who want to go in, VR is the next big thing, there is no doubt about that. But is this because of demand or something else? That is something, or that's the reason. That reason is very important to understand, because it will give us an indication about how much people want to spend right now. Okay, so it's all depend upon their investing capacity, or this will give you an indication. I'm not saying a very big or a very close indication, but just an indication that whether the interest rate hike is working or not, because people will not spend in luxury until and unless they have enough money in their pocket, and more than that, they have confidence in their mind. Let us see. So everybody is working on AI, whether Google or Microsoft. Apart from that, let us see what else we have. The Fed and a big jobs report could drive the market ahead. Yes, let us see, because we have in the next 20 days, we have job report data, we have FOMC, next FOMC meet, so that will definitely drive the market, and if anything goes wrong, we will again see a downtake. So that's an I would say that's a very negative thing, but market is moving within a range. I'll show you. Let us see what else we have in front of us. I think this is the most of it, because there is no point talking about geopolitics. It's going on for the last couple of months, and we don't know. We can pray for things to get settled down peacefully. Apart from that, it is creating an havoc, not only in geopolitics but most importantly in geoeconomics, because inflation is rising up when two of the major global exporters, the things are not looking good, and it will definitely have an impact on your pocket, which the Western countries most specifically are suffering from. So you need to understand before shouting on social media and going on this side or that side, what you are paying for, and how much cost you can incur. And it's not only about you, there are hundreds and millions of people who are suffering from that. Their budget has already changed in the last 1.5 year. Now let us see what has happened in the last 1 week. Now obviously all the major indices closed in green. Dow Jones up by 387 points in the last trading session last Friday. Nasdaq 226 point, risen the most, 1.97%. S&P 500 64 points. Gold up by 22 points or 1.21%. Oil, it's trading in between 70 and 80. So this has become a range. So you need not to bother about that. We will see, because once a big move happen, then we can discuss. Apart from that, US 10-year yield closes very near to 4%. I mean, this was the headline that it is now retreating from 4% to 3.9%. I don't see uh, this makes much of a difference in stock market, because stock market does not react multiple times on a single thing. That one day yield is going up, then stock market falls down. One day yield is going down, stock market goes up. So this cannot be a reason, because it is happening for the last 1 year, and the stock market does not react multiple times, as I told you, on the same thing. Apart from that, it's good that VIX has started falling below 20, and let us see if it moves below 15. We can get much more stability into the market. So we will definitely look into it, whether or when will the VIX comes down and started trading below 15. Once it happens, you will see smoother market. Apart from that, yeah, the yields are getting closer now. So the thing is, there was lots of difference in 1 month and in 30 year, but somewhere, if you are looking at the chart, it is getting closer and closer. So now from inverted, it may turns into a flat yield in the next couple of months. It will happen in the next couple of months. It will take its own time. But one thing is very sure, which is there into the visible in the price or in the bond yield, the 6 month yield and the 1 year yield, which is at 5 and 5.1, and which is way more higher than 10-year or 30-year yield. So it certainly indicates that the uncertainty in the next 6 months to 1 year is much higher compared to next 10 and 30 years, and that causes this volatility. Understand this. Bond market is the supreme, because bond market is the largest market in the world, and you cannot manipulate. Okay, no investor or manipulator can manipulate the bond market, because it is way too big for somebody to handle, or for at least a group of people, until and unless they have lots of money, they have lots of brains, and they know how to fix each and everything. Yeah. So if bond market is indicating something, or when the data is on the wall, you need not to predict that this is going to happen. Just rely on data. Don't rely on me, don't rely on anybody else. Just rely on the data which is available in front of you. Dollar index closed at 104.5. I have said this thing, and I'm saying this thing again. If dollar index continues to trade above 104 or more, the trend is on the upside. This is very clear. Let it settle below 103, then we will talk about the downside. I have said this thing in the past, and I'm saying it again. Yeah, this is just an observation, and you need not to put much of a brain into it, because things will happen in its own way. So let us start with all the major indices. Okay, but let us start with the dollar index itself, and because I have already opened it, so better start with that. And as far as the dollar index is concerned, it is trading in between a range right now. You can clearly see the range. Here we are. So what do we have here? For TXY or dollar index, we have our support, which is 104.38, and if it continues to trade above 104.38, it will move towards 106 and 106.5. So this is the range in between which the dollar index is trading, and it is still positive. So just wait. If you want to go aggressively long into the stock market, just wait for the dollar index to at least falls below 104.3, because then we can consider this as a range breakdown. But if it holds on and trades above 104.38, then it will again start moving higher. So that's the risk we have. So there is still a cautious stance along with the optimism. Now let us see what is happening in the Dow Jones. I mean, Dow Jones is a very clear chart pattern. You can clearly see what is happening in Dow Jones, because for the last 2.5 months, Dow Jones is trading in between a range. You can clearly see that. Okay, so there is nothing to worry about, or no need to scratch your head over here, because you can clearly see the range in between which Dow Jones is trading, and you just need to play the range. You just need to trust the market and play the range. So a move has already been started. So for Dow Jones in the next 1 week, with a support of 32,992 and stop loss of 32,575, we have 34,350 and 34,562. That's what we have as far as the target is concerned. Okay, so this is the range, and you can clearly see how Dow Jones is moving within the range. Now talking about the Nasdaq is very interesting, because last week it breaks below the resistance zone, so it entered into the range again, but then we have seen a breakout in the last 2 days. So make sure, even going forward, if you want to go long, that's fine, because a breakout confirmation has happened, but make sure that Dow Jones is not going below 11,555 and 11,500. If it is continue to sustain above, if Nasdaq continues to sustain above 11,555, we have 12,275, we have 12,650, and Nasdaq will expand up to 13,150. But it all depends upon the breakout zone, and focus on 11,555 and 11,500. Now simultaneously talking about S&P 500. So S&P 500 has already started moving higher, but what I am focusing on, or what I'll personally rather focus on, is this specific level. And if only S&P 500 started trading above 4,100, then I will consider a breakout over here, and then I will talk about 4,300, 4,320 as far as S&P 500 is concerned, because right now S&P 500 is in a range, and a breakout is yet to happen. If you can clearly see, a breakout is yet to happen, because it follows Nasdaq. So if you are very bullish on Nasdaq, and 200-400 point move in Nasdaq could easily push S&P 500 above 4,100, and then we can talk about the breakout. But let's wait for the breakout to happen as far as 4,100 is concerned, and as far as the stop loss, we have 3,945 for S&P 500. So this is what we have here as far as all the major indices and dollar index is concerned. Now VIX is a very important thing, or a very important factor which one must look at, and you can clearly see from 23 to 18. So there is a big fall that has been registered as far as VIX is concerned, but I am very focused on 15. 15 is the number which I'll generally focused on as far as US market is concerned, or Wall Street is concerned, and 12 to 15 is the zone which I believe where the market behaves in a very controlled manner, and it's very calm and composed. Both the sides, you can get your moves very easily, where you can forecast moves either on the upside or on the downside, and you will get it in a specified time. So let it settle below 17.24, because then we will move towards 15. It is still trading above 17.24, so chance of going or rising higher is there even right now, but if it falls below 17.24, then VIX will moves toward 15, and then you will see much more stability into the market. But if it's because it has started falling down, so if it continuously fall down, you will see sustained move. If it is on the upside, you will definitely see a sustained move across the market. So that's a very good thing that may probably happen. Now, talking about gold, gold is playing very safe, and each and every dip is a buy. That's the kind of price action we have in front of us. You can clearly see. Okay, I have been talking about this range for the last 3 or 4 months because it's very clear. Near 1600, 1630, 1680, it's a buy, and 1900, $2000, it's a sell. So, if you indeed if you are a trader and if you are just simply following this, you would have made money twice in the last couple of months, because you can clearly see what has happened, and we have a very simple price pattern to look at. Okay, so here we are, and here we are as far as the immediate support is concerned. So if you are looking at the overall range, we have 1683 and we have 1625 as far as the lower end of the range, whereas on the upside we have 1924 and we have 2085. Meanwhile, you have your immediate support at 1800 bucks. So this is a very simple range that's been playing out. I mean, even from now, if gold futures I'm talking about, continues to settle above 1812, then we will again move for 1924, 1925, and the price target may expand up to 2085 on the upside. So this is what one can expect as far as the gold is concerned. Now I would like to focus on US 3-month yield, because that's the near term, and that is not as sensitive as the 1-month yield. But if you are looking at the overall price pattern, or what is happening as far as the near term yield is concerned, and most, if I'm just giving you an example, but in most of the yields, you're talking about 1 month, 3 month, 1 year, 10 year, 30 year, it turns flat. It literally turns flat, and it looks like there is something which the bond market is actually waiting for. So it is not about last 2 days FOMC members comes and gives statement and market react. It's not like that, and simply based on the price, I just give you an example of US 3-month yield. If 3-month yield settles above 4.93, then you will see further upside, and it does not matter who is saying what. It all depends upon data. If the economic data turns strong, Fed will again raise the interest rate, and again give some hawkish commentary, because they don't want to set the market or let the market lose. If they does, then obviously the inflation will spike up very sharply on the upside. So even if they don't want to become extremely hawkish, they are not going to give you that signal either, that we are now normalizing. They are not going to do that. Okay, they will keep the market on the edges. So as far as 3-month yield is concerned, just wait for 3-month yield to move, and as I told you, if it settles above 4.94, obviously it will be considered as a breakout. Now let's turn into US 1-year yield, and you can simply see what is happening here. A breakout has already happened above 4.84, and even if it is not going higher, it is trading above 4.85. Okay, and in US 1-year yield, the current range which we are looking here, or the current range which is available for us, is 4.85 on the downside, and we have 5.12 on the upside. And let us see where will it move? Because if it, even if it falls down to 4.85, yes, that will be a fall. But if it continues to trade above 4.85, then it is still trading above the breakout zone, and in that case it will again have that potential to move higher. But right now, if it started trading above 5.12, it will be considered as a breakout again. So we are not at all out of the woods. Focus on the data point. If the data point, economic data point, is strong, you will see a positive impact on the interest rate, and you will see a negative impact in the stock market. And that's where the dilemma lies. Even if the trend is saying an upside as far as all the equity indices are concerned, but when I'm looking into the bond market and when I'm looking at the economic data point, it is saying something else. And that keeps the market on the losing front, rather, because you are not going anywhere. You are not going down, you are not going up. So that's the new normal, and that will be, that will continue. As far as I am concerned, that will continue for the next couple of months, because the trend is not clear yet. Somebody is saying the interest rate cycle is over, somebody is saying it will continue for the next couple of months or years, somebody is saying that we are in a stagflation. So there are different theories, but you need not to believe me or anybody, even he or she is there in the market for the last 50, 60 or 70 years. Just focus on the data, you will see what is happening. Yes, one more thing, yeah, Bitcoin. I want to touch the crypto market as well, just to give you a flavor. And Bitcoin, even if it is not moving higher, it is not moving lower either, because you can clearly see I have talked about a range breakout, and after such a long time I'm getting this kind of mature move. Otherwise Bitcoin will fall like a pack of card, but the kind of move it is displaying is very, very mature, let me tell you. And if Bitcoin, it may fall towards 20,387, but if it continues to settle above, or if it continues to sustain above 20,387, it is still a breakout. A breakout has already been happened, it is now falling down. It may retest 20,387, but if it sustains above or at or above this level, you will see an upside. This is a brave call, I know, because I mean there are very few people who are talking about Bitcoin, but I have no attachment or no emotions or feeling attached to any financial instrument. I'm just analyzing the price chart, and that's why what price chart is telling me, I am telling the same thing to all my viewers, all my respected viewers. So I hope that you will make your upcoming week a profitable one. And with this regard, with this I would say wish or pray for all of my viewers, I'm just saying that this is the end of the video. So thanks for your time and thanks for watching. So this is the end of the video. Thanks for watching.